What is going on? Welcome back to Financial Journey. So today I want to talk to you about a possible addition to SoFi, and especially they've been talking about it for a while now, and there was something that was posted that does allude for it to be in the foreseeable future. So I'm going to explain what that is, and not only that though, I want to talk on some expectations of Q2 earnings based on some articles that's been for other traditional banks and how that might roll over to SoFi. Before I get into any of that though, making sure you guys hit that thumbs up and subscribe. I greatly appreciate that. With that though, let's get right to it. So highly anticipated earnings is coming out on August the 2nd, and for the most part the last 3 or 4 earnings have been very much a success for SoFi. So I think this is why right now the Q2 earnings are very highly anticipated, because this is actually the first full quarter of it being a charter bank. So this is actually a huge deal for SoFi. But there was this that was posted on Twitter. Hey SoFi and 𝗪𝗓𝗡𝗘𝗖𝗧, ever think about buying StockTwits or Yahoo Finance's message boards? Are y'all trying to be a social finance company? And they've definitely alluded to that in the past several different times, that they want to either have a chat platform or kind of integrate that into their investing, which in reality should be fairly positive. But SoFi actually responded. Hey, great recommendation. SoFi is always looking at ways to expand. Keep an eye out for upcoming updates. And the way I actually interpret their response is very positive. It looks like they technically are already working on that, which in the past, like I said, they have kind of alluded to that is what their end goal is, what they want as far as another additional feature. So I personally use StockTwits. It's a pretty good platform, so hopefully they do incorporate that into their investing platform. So let me know your thoughts on this in the comments below. We might possibly hear from this in Q2 because 𝗪𝗓𝗡𝗖𝗧𝗛 likes to give a lot of good updates about the future, what's coming for the tail end 2022, some things for investors to look forward to. So hopefully that might be for Q2, or possibly if not, might roll over to Q3 for an update. But still, this is a very good sign if you ask me. And just moving on though, when it comes down to mortgages, there's a lot of different things as far as where they're trying to get their business. Hands down, this is going to be most likely, based on their Q2 earnings, is going to be very positive. I think there's going to be a lot more developments in that, because they do have a very competitive rate, as low as 3% down. So in reality though, there's a lot more articles that are coming out comparing the big traditional banks. But at the end of the day, I think on our Q1 earnings, that speaks volume about the amount of analysts asking questions, because we are a very disruptive company. And looking here, so this article does for the most part compare Bank of America to JP Morgan, where it says Bank of America really kind of orients itself towards consumers, which when I read this article, it really mirrors exactly what SoFi is doing. Just keep in mind, SoFi is a lot lower cost, and not only that though, they're technically a very disruptive company that have a lot more different attributes than Bank of America. So whatever they're saying about Bank of America, I interpret that as SoFi is going to do 10 times better than Bank of America. Then it talks about JP Morgan though, how they're technically trying to target Wall Street. But there is a couple of things I want to share with you in this article, one of which is talking about Bank of America, how it's being so successful with a lot of its loans. And it says one reason the bank is so healthy is that the high credit scores of borrowers have translated to lower default rates. We all know SoFi has a huge FICO score among its customers, and that's a very big deal. And a lot of people are overlooking that, because that is actually a very true fact. And I've said that point in many videos in the past, that technically having a high FICO score ultimately reduces the overall risk for SoFi. Again, it's one of those things that we are very competitive, so we're trying to get a lot more customers by having either incentivizing higher rates for customers for checking and savings accounts, or potentially just lower mortgage rates, just to, like I said, get more customers, because I think that's one thing that we do desperately need in the short term at least. But still maintaining our high FICO score status of the customers is a very big deal. And then the rest of the article does actually just talk on how Bank of America capitalizes on the consumer spending through multiple different products. And I think that speaks a lot of volume towards SoFi, because we all know SoFi has a lot of products. They trying to orient it being a all-in-one bank, that it can do everything a consumer actually needs, whether it be a mortgage, a credit card, a checking account, investing, everything that you need all in one spot. And so this is where in this article they're kind of trying to portray Bank of America in that kind of light, in that similar thing, and that's is why they're earning so much money, such as 2.1 trillion. At the end of the day, I feel this is exactly why a lot of people invest in traditional banks, because of basically this article, everything they say about being a all-in-one spot, more specifically for Bank of America. But I think a lot of people, once they realize what SoFi can actually offer and why they are being more competitive than other traditional banks to get more customers, I think once people start to have that epiphany, then SoFi is going to go up considerably. And when I talk about considerably it going up, I'm going to talk on this. A lot of people don't realize that smaller cap companies such as SoFi, when they go up through a rebound, we completely obliterate the larger cap stocks. And this is a chart of the last 1 month. And I know technically over the last couple of weeks, that is when we started to rally a little bit. But if you do compare SoFi, Bank of America, and JP Morgan from basically June the 23rd, even though we've gone down a little bit over the last couple of days, it does appear that we're still at least 10% over Bank of America and roughly about 15% over JP Morgan. So it is a very positive thing to invest in SoFi with the huge amount of upside potential. And keep in mind, SoFi is still in its beginning stages. So us comparing ourselves to Bank of America and JP Morgan, for instance, right now, and us still outperforming them, imagine when we actually start to get the ball rolling on a lot of different things. Because keep in mind, they've alluded to a lot of big changes at the tail end of 2022, night and day changes. So this is why when you're investing in SoFi, don't worry about the short-term stuff. You need to invest a little bit more long-term, even if it's at the tail end of 2022. There's going to be a lot of positive things at that stage, but 2024 at least is when you should invest in SoFi. Keep in mind, I'm not a financial advisor, so do your own due diligence at the end of the day. So I found a lot of things interesting in that regard. I'm just going to tie it all together with some technical analysis, just give you a good projection of where we might be going. So right now I do have the 50, 100, 200-day moving averages, Bollinger Bands, RSI, stochastic, and momentum. So number of buyers is down a little bit on momentum. Stochastic, we are a little bit more overbought with 92. RSI is currently at 56, and on the actual chart we've been higher percentile of the Bollinger Band for the last little bit. Not enough to get outside of that, which is a very positive sign. I always say whenever we do break out of that, unless we have a justifiable reason, we do get pulled back in. Friday was for the most part a broad market, just consolidation. At the end of the day, I do not feel that it is down and out. A little bit of consolidation is very healthy for the long-term growth, as long as we can maintain and don't kind of go below the $5.91 mark. And so overall, a lot of positive things on the technical front as well. I'm just going to quickly pop over to Interactive Brokers, because when I do technical analysis, I look at moving averages, indicators, things like that. If you are a big fan of the Elliott wave, it is projecting SoFi to go to between $8.54 and $9.02 in the short term, as long as we can stay over that $6.05 pivot point, which given the circumstances, I feel that we can easily do that, because the next big negative catalyst that is coming out is on the 27th, which is the Fed's decision rate. And SoFi, I think, is starting to break out of that mold about the negative image about higher interest rates affecting growth stocks, because I think a lot of people are finally realizing that when it comes down to SoFi, if interest rates do go up, it's actually going to benefit the bottom line and the revenue for SoFi. So it's going to be a win-win, and SoFi is very well positioned to kind of establish and break out, especially like I've been saying over the last several videos. Consumers have been still maintaining their actual jobs, their actual positions, still out there making a lot of money, which very beneficial for banks. So SoFi is going to capitalize on that. So let me know your thoughts on that in the comments below. If you do like looking a lot of Elliott wave or even technically analyst ratings, take a look at Interactive Brokers, link in the description below or just in the comments as well. But with all of that, don't forget to hit that thumbs up and subscribe. I greatly appreciate that. And also, if you do like my channel and support the growth, take a look at my memberships, link in the description below, or just hit the join button at the bottom of the screen. With that though, I appreciate you guys watching, and let's all make a lot of money on SoFi.